AVCT stock has made an upside move per our expectations, but why did it stop moving up and why did it stop falling? We actually lost about half of what we ended up gaining during the session for today. Well, let's go ahead and find out in this video exactly why those things happened, in technical terms, of course. What is up, you guys? Thank you so much for stopping by. This is ARCa coming at you with an AVCT, technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community group in Discord, called ARCab. With that said, let's go ahead and begin. You guys, if my voice starts going away, that's because I'm not feeling too well. I'm actually a little under the weather, and I've tried to blow my nose enough so that you don't hear me sounding congested throughout this video. So yeah, you guys, please excuse me if you do notice some loss of voice right here. But anyway, that's beside the point. Let's go ahead and move this right along. Okay, so you can see that actually this moving average, we'll highlight it, and you can see that this is the 30-day exponential moving average, which we use as a form of resistance before facing a downside move. Now, the downside move is very much expected, since let's hide these moving averages so you can see what I mean by that. This was the falling wedge that we were looking at for some days now. And we recently failed it, and we reclaimed it, and now are retracing. Now, usually you guys know that I talk about the golden rule of three often. The golden rule of three usually consists of 3 tests of the resistance from the formation, and followed by a large capitulation event or an accumulation of sorts. Apologies. And we did make that happen, and since we reclaimed it, now the retracement could very likely be for us to come back and test the newly converted resistance into support, which just so happens to have direct confluence with our not 382 Fibonacci retracement at about 84 cents, 84.03 to be precise. So there is that form of support. Now let's put back our moving averages so that you can see what we also have. Now, within that support touch, we also have the 10-day simple moving average, which also has some confluence with the not 382. Let's hide the SMAs and bring up the exponential moving averages. Now, these are the EMAs, and you can see that today we actually closed right above. Let's zoom in so we can see that clearly. We actually closed right above the 7-day exponential moving average, and the 7-day exponential moving average also has confluence with our not 618 inverse golden mean. This is a very important support. However, we are slightly under it, so we do have to essentially break out of the not 618 and confirm this as a form of support as well. Judging by raw price action here, guys, we're looking at the 4-hour chart, and this pattern actually looks like a bull flag, but it may be traded on a higher term time frame, like an 8-hour or a 6-hour. Or let's check the daily as well. We have to just move on through the time periods to see what could be the potential of the move that we're looking at. So in this case, in the 8-hour chart, we can see that we have now the 1 and 2 candle pullback. I usually talk about if we're going to follow bull flags. I actually don't like to follow this formation too much. And the reason why I don't follow it is because it has a lesser hit rate than that of triangles, anything in the triangle family, to be honest. So we are looking at the second candle pullback, and I usually like to see 2 candle pullbacks before the third candle being the one to realize the upside based on the bullish formation. Now, also, we're looking at a potential cup and handle now in a smaller time frame. So if we go into the 30-minute, let's just go ahead and verify this. I'm actually talking to you in almost real time. I'm improvising as I'm going with what I'm showing you here. Now, this is what I mean here. Actually, let's take a look at the bi-hourly to see if we can get some clarity within that. Okay. this candle, these two candles actually throw the pattern off just a little bit, which may be a reason to invalidate it. But we do have to acknowledge that it is within our grasp or our grip. So let's go ahead and just draw this right over here, and we'll do this together, okay? So you can see that the bottom of the target is right over there, and we can actually add what could potentially be our handle right over here. And this is, we're looking at it in the 2-hour chart. So this, there is the potential of invalidation because it is a smaller time frame, and usually these smaller time frames tend to fail, right? So now let's just make this a little bit wider, and then we can see now that we do potentially have a cup and handle situation happening right over here. So if we were to look at that price objective for the cup and handle, we actually take a trend line from the top of the candle to the very, sorry, it actually didn't catch it there. So let's do it one more time. We'll take it from the top of the candle to the lowest, from the top of the cup to the lowest point of the cup, and apply it to the top of the handle. And that would give us essentially a price objective. Now, the price objective is in direct confluence with the 1.618. And this is a target that we've already, see, this line was already previously drawn before we came into this. This line has been here because this is a target that we are looking for. This is just, let's see. So we have a resistance range now based on the price objective and the 1.618 golden mean. So let's go ahead and make this resistance range box just so we can see what is happening within this area. So you can see that this candle right over here is using it as a form of resistance. I'm not sure that we're going to find too much back here since we are in price discovery, but you can see here that these last two candles absolutely used it as a form of support. And it since rejected to the upside. So the area is definitely previously touched and previously tested. You can see a candle right here, right at that 0.618. So we have a potential rise to look out for. Another thing is that when these cups fail, again, it's another formation that I really don't. I call them, but it's only because they're there. They're being shown to us. There is a potential as well to where we could be forming a falling wedge as well. So it's a little too early. It's a little too early to tell just for now. But since we do have these relevant supports, like the newly converted resistance into support from our falling wedge, we have the 0.382 at 84 cents, and we also have the potential psychological component which the cup and handle adds to the trade. We do have a substantial amount of supports in the down right here in the bottom side of this range, which could be looked at or achieved within the next trading session or two. And potentially in the early pre-market, followed by a recovery in either the next day or late session, right? Another thing that we can look at in the bi-hourly chart in particular, you can see that the position of the 7-day exponential moving average has since changed, and we are below it. So we can actually use this as a form of resistance alongside the 30-day exponential moving average to per se guide us towards the downside for a test of these supports. We need to make sure that these supports are validated before us continuing to the upside. If we open up the SMA 10, we are probably below it too. Let's take a look. Okay, yes, we are. So this is the 10-day simple moving average, and we are also below it. And you can see that we are actually right at it today. So we can find some resistance within these moving averages to continue our downside thrust for now. This could likely be a temporary pullback. The good thing is that we are printing a series of higher highs and also higher lows, which is good. And also, if we pulled back even to this area here, that would be, I would say, in a sense, ideal, because then we could line up these candles just like this, and you can see that we do have some confluence even with this trend line right here, showing us that this could be a bottom. So the bottom for this range, if we don't fail it, you guys, it could be 84 cents, 84.46, 84.50, right around there. Now, please remember that I am not a financial advisor. Whatever, please take whatever I do show and iterate within these videos as a form of entertainment. I need you guys to do your own DD and we'll be okay. Now, this could potentially be a triangle of sorts in this manner as well. And we're looking at, it could be from this candle right here, right? So we can actually draw this like this and we can see that we are in a sense, we are in a bullish formation here as well. Now, if we were to take the trend line price objective here, it would be from the top of the triangle to the lowest point of the triangle, which could potentially be right about here. And now we apply it to the point of a supposed breakout. Usually these triangles tend to realize when we're at about 70%, 75% to the apex of the triangle. So let's go ahead and apply it. Let's just per se here and see what that gives us. We'll also add a Fibonacci retracement so then we can see where we are. First of all, let's draw a trend line from the price objective, or to the price objective, my apologies. And now let's get a Fibonacci retracement and see what we have. What I am noticing here is that this is implying for us to come up and potentially test the larger descending channel that we're in. So this could very well be an area of interest. And also you can see that the knot 618, I'm sorry, the two spot 618 inverse, it's actually not inverse. At this point we are going up. So this is a golden mean as well. We're looking at 45.92 at the top of the channel, which does have some rhyming with the price objective to this area. What I mean by rhyming is that usually when we have something very close to a 618 ratio, we can wick up to that and then come back and use the price objective as a form of support before a continuation onto the upside. Since we are looking at two bullish patterns, we can use this area, which is what we were looking at for the price objective of a supposed cup and handle. We can use this as well as support, a support range. And as you can see, the 100-day simple moving average is in direct accordance with that support of the one spot 618. So we do have a lot of 618 ratio happening within this structure, but we are in a sense moving in a bullish structure. So one more thing, if we were to move the triangle formation to this point, usually ascending triangles like this have a downside target to them. We have to be careful with this. We have to make sure that we have our stop losses in, and we have to make sure that we're practicing risk management. If not, we'll lose. If we do realize that downside move, a price projection from the breakout of about 70% triangle, you're looking at a retest of this low. It does have confluence with that low right over there, you guys. So now the edge will start getting dimmer and dimmer for traders like me when we start reaching these areas here, because that would be introducing an all-time or a 52-week low. 52-week lows tend to jump into price discovery. Now, price discovery to the downside is very dangerous. We have to make sure to use now whatever formation we have in order for us to see a relevant target. I want to see if we had it. Okay, yeah, it doesn't look like we have anything before that at all. So at this point, we would actually have, when and if we do reach this area here and we do capitulate to the downside, we have to make sure to practice with inverse Fibonacci ratios. So in this point, for example, like this, we can take it from the current price action to the range high, and you can see that we then start to get some lower targets. From this point to this point here, swing high to swing low, we're looking at the bottom of our descending channel having confluence with the 3 spot 618 at 60 cents. I'm not saying that that's where we can go right now, but there is a potential. We have to make sure to look both down and up when we're trading. Let's move on to the next chart, you guys. This is another bearish formation that we're looking at here, and this is particularly to the 2-day. This is the bi-daily chart. So this is a bearish harami setup, not quite a bearish engulfing. So we're looking at a large green candle followed by a smaller red candle in which the green candle is entirely engulfing, and a smaller wick to the top. We do have a smaller wick there, and we do have it sitting within the body of the green candle prior to it. So this could be a potential downside coming up in the following session or two. Please remember that this is very much in confluence with us looking at the, let's go back to the 8 hour chart. I think we were on the 8 hour or 4 hours, sorry. So this is very much in confluence with me talking to you about retracing or making this cup, I'm sorry, the handle of the cup, excuse me, wow. The handle of the cup retracement all the way down to the SMA 10 or the knot 382. It's very much in confluence with that. So we could see a downside target first before a continuation onto the upside. It's important for us to notice raw price action as well as technicals and most importantly data. Okay, then after that we can apply the psychological components applied, because we do have the presidential formal announcement tomorrow, and we also have PPI data released tomorrow, the price producer price index, and also we do have Fed minutes coming up on the 23rd of November. So there are a lot of macroeconomical catalysts that can likely affect the price action in everything under the sun. We have to keep those things in mind. This is a very dangerous time to trade. Please remember, guys, I'm not a financial advisor. Take whatever I do show within these videos as a form of entertainment. Do your own DD and we'll be okay. All right? So the statistical side of this is playing out the way we're looking at it, the way we wanted to. We were looking for both the volatility component of the BBWP. This is volatility we're looking at, represented by BBWP, new listeners, as well as the moving average, both pivoted to the downside below what I consider to be critical expansive volatility area, which is anything beyond this line right here, the 90 percentile. So we needed for both of these attributes to be pivoted towards the downside alongside the signal, and the moving average line of the stochastic momentum pivoted towards the upside as well. So we are now getting those signals so we can actually start applying our metric. We needed for these to be below the 90 percentile. So the metric that we are looking for is actually this right over here. We already have it. We already have the data back test for us to review. So we're looking at a total of 12 iterations where I measured the duration of the iteration, the upside thrust versus how many times the iteration guessed correctly to the upside versus the downside. In doing so, we got 12 iterations, and out of the 12, based on volatility versus momentum profile, both of these together, they performed a 12 out of 12 hit. That gives us a rare 100% upside accuracy with an average upside thrust of 53% over the span of just over a month. Okay, so it's important for us to look at that, but you can see that we are now pivoted towards the upside. This gives us the bias and direction since volatility is direction neutral. Okay, so we can apply that 32% or the 58% to the metric now and see what that gives us. So in applying that 58% to the upside, you can see that it actually has a direct influence with our not 236 larger scale. And if we're looking at a smaller scale or a smaller time frame, Fibonacci retracement, we can see that it does have direct influence with our 2 fib, or just under the 2 spot 272, which is at around, I would say, a range between $1.50 to $1.60. And now, please remember that these are not certainties. They're statistical metrics, and we are looking at it in the bi-daily, so this is likely to take time. Okay, so tomorrow's catalyst, we are waiting for President Trump to announce his formal presidency running, and most importantly, if he, in my theory, my opinion is that if he does announce that he is going to be putting his bid for Speaker of the House, then we can see a massive rally in the overall markets, thus pressuring everything to the upside, thus closing short positions on the way up. Stop losses can be triggered with more and more buying pressure applied to it. We're potentially getting that signal right now. please remember to just take whatever I say with a grain of salt. Okay, don't just move on and make that decision to the upside. Okay, so this is the RSI, you guys. So that I don't have to explain what zones of the RSI it is, I left this drawing here for you. Oh man, excuse me. Let's look at the immediate short-term time frame. This is the 30-minute RSI, suggesting a continuation to the upside. We are primed to make a bullish cross above the moving average, but please know that we're in the weakness area of both of these, bull and bear. So this is likely to face some sideways action, you guys. So now we do have the buy hourly right here, suggesting a continuation to the upside and trading above the moving average, which is bearish. However, again, we're in that shallow zone. We're likely to do this type of movement until these economical catalysts realize. What I'm looking at here is that let's see, excuse me, you guys, really not feeling that good. Okay, so let's look at the time frame for this real fast. The time frame for this one I'm talking about. I hate that my chart looks like this. My apologies, boys and girls, of course, right? Let's make a quick adjustment. This is so terrible. There we go. Okay, so yeah, this is the 6-hour chart, suggesting a continuation onto the downside and primed for entry into bear strength percentile. Please just go ahead and refer to this. This is giving us the likelihood of a downside, which is very much in accordance with what we were talking about, first of all, with the bearish engulfing, and it's also in accordance with us dropping back down to test this, both of the supports of every formation. We're talking about the falling wedge, the cup, and this ascending triangle. We're looking at a test of every single formation's bottom here, which is very much in accordance with that. So we do have to give this some weight. The daily chart is also giving us a downside suggestion, and we are sitting in bear strength percentile. So we have to give this some credit. I think this is a pretty good place for me to leave off the video, you guys. If you have any questions, please don't hesitate to reach out to me on Discord, on Twitter, and I'll make sure to reach out to you too. Let's talk about these analyses, and then we'll further discuss. But I'll make sure to leave the links in the description below as well for you to consider joining the ARCa trading community on Discord. But with that said, I wish you a good night, and I will catch you at the bell mañana. Adios.